If you don't mind, though, I'd like just to sort of start at a high level to sort of jump the discussion off here. What's your current assessment of the U.S. housing market?
Honestly, the housing market's been insane for 3 years straight, and arguably, you could say for a decade prior to this. But we basically have gone through a whiplash with what we had in 2021. We had extreme price instability with prices in a lot of regions climbing 2 or 3% a month, which is typically what you would see in annual appreciation. And this went on throughout most of 2021, or all of 2021 and part of 2022. And the Fed finally slammed on the brakes, and they slammed them pretty hard with the rate hikes, because about 6 or 7 months ago, you saw just a complete stop in activity in housing. The rates essentially doubled overnight, which is extreme. A lot of people focus on, rates are still on average historically low at 6 or 7%. But you can't look at the average. You have to look at the rate of change and how quickly the rates change, because that's really what affects how consumers view the market, and that affects affordability, with prices still being basically priced for a 3% interest rate. So in the summer, we had this brake slam on, activity stopped, kind of that went on all through the end of 2022. And it sort of felt like the housing market's dead. We saw these articles, people were like, is housing dead? Demand is dead. And then we came into 2023 and we got a little bit of signs of life. There was some uptick in activity, mortgage applications bumped up a little bit, interest rates dropped a tiny bit. And everybody in the industry got excited. They were like, maybe we bottomed. No, but that was sort of the sentiment that we had, I would say, in January and early February, was this hopeful little uptick of, and it coincided with what was happening in the stock market too. Just this idea that, hey, maybe we can get a soft landing for everything. And maybe the worst of housing is over. Maybe this was just a sharp, brief correction. But I don't think that it was. And I think it was just yesterday we got the newest mortgage application data, and it was really bad. It was the lowest it's been for the 21st century. So rates are back almost at 7%. And once again, I think we're finding ourselves with demand is just being sledgehammered into the ground. So while you might hear some people say, oh, there's bidding wars in my region, or there's not a lot of inventory. That's true. But demand is what's being killed, because really all the Fed can do is kill demand. Their tools are a blunt sledgehammer, and it can kill demand. They can't create supply. They can't build homes. So right now we're in this sort of stalemate-like situation where people who bought homes at these low interest rates don't want to sell them. And people and they're not in distress yet, so they're going to hold on to those homes. And people still want to buy homes, and there's not a lot of inventory. So sellers are sort of still able to hold out for these kind of ridiculously high prices, just based on the fact that inventory is still tight.
Without mortgage rates coming down substantially anytime soon, do you see any reason, just based on the mortgage rate math alone, why we should expect the shock victim to recover versus starting to see organ failure, which I would call, equate to much lower prices in markets from here?
So you're asking, like, is there a bullish case from here?
Yeah, well, I mean, so like you said, so, things perked up a little bit at the beginning of this year, and it was because the narrative was trying to turn, right? Oh, maybe we're going to have a soft landing. Recently, there was this no landing, trial balloon floated. And mortgage rates did tick down a little bit. They've since reversed and have started going back up again, but they didn't come down all that much, right? They're still much, much higher than they were a few years ago. And as you said, we're pricing houses still in many markets at the same values of where they were when interest rates were 50% what they are now. And my point is I just don't see how that can sustain just from math alone, unless mortgage rates go down, or I guess incomes in all these markets go up by some tremendous amount tomorrow, which I don't think anybody's forecasting right now.
No, it's hard to envision that scenario. I think, again, this is all sort of based on that fantasy soft landing concept. I think that, maybe markets were anticipating that the Fed would back off the rate hikes or even pivot at some point in 2023. So there was maybe uptick in activity with the idea of, well, if interest rates might be fives by the end of the year, fours, then I can buy a house now and refinance.
Got it.
Later.
So it's sort of a front running of the pivot.
Yeah, front running the pivot. I think that's really probably the only scenario that makes sense, because assuming, as long as we're seeing shelter inflation not coming down on CPI, I don't think the Fed is going to back off. And they may stop hiking, but they're going to hold until they get what they want in the data. And I think as long as that is occurring, I do not see, like the mortgage applications data from yesterday's show, I do not see buyer demand overall. So I don't see any way that that's going to support prices or bring prices up. And recent data is also showing that investors, for the most part, have started to back off as well. The cap rates don't make sense right now. And now you've got well-funded, very well-capitalized investors waiting in the wings. And there's a lot of people who say, well, we can't have a housing crash because all these people have capital and they're just waiting for a bottom. But that is a valid point to some extent. But again, I think right now they're not buying, they're waiting. So
Right.
If they're holding back and buyer, like residential, just family buyer is priced out or their demand is killed, there's no buyers. Prices are just going to keep going down.
How did we end up in this world where houses became this ridiculously valued, ridiculously valued asset, given the incomes that are used to buy them, right? I mean, in theory, housing should be a multiple of local incomes, but I believe that multiple has gotten really distorted over the past couple of decades. So how did we end up here?
So basically, I would say the difference between like grandpa's housing market and our housing market today is, a lot of people say it's the high interest rates versus the low, no, the difference is that back in the day, I would say up until the early 2000s, I'll say the turn of the century is when this changed. Residential US housing was not a speculative asset. People bought homes so they could live in a home. They assumed and generally got 3 or 4% appreciation annually. And you took on a 15 or 30-year mortgage with the expectation that you would pay it off. You would live in that home in retirement and you would have your shelter costs taken care of.
Right. And sorry to interrupt, but it was almost sort of like a forced retirement vehicle, right? Like,
yeah.
I'm going to have a roof over my head. I'll be able to raise my family in it. And at some point in my twilight years, I will have all the equity in this building.
Yes.
Yeah.
And there was real estate investment back in the 80s and the 90s, but it was primarily commercial. There just wasn't, half of the companies you see today, like the iBuyers, the Redfins, the Zillow, Airbnb even, they didn't exist back then. They didn't even exist. Those were all babies born of endless QE and ZERP era.
Okay.
And, the thing I would, hammer in, if you're a millennial or a Gen Z person and you're super frustrated with this housing market and you're like, like my parents keep telling me I just need to drink less Starbucks and I should be able to afford a house. I would say, dad, grandpa, whoever you are, when you went to go buy a home, you were not bidding against an iBuyer when you were buying a home. You were not bidding against.
Could you just define an iBuyer for the people that don't know exactly what that term means?
Sure. So iBuyers, Open Door is the one a lot of people think of first. And then there's Redfin. Zillow did it for a while, but they dropped out. It's just a company that buys homes, and they buy them with the intention of flipping them or sell it, or maybe some of them rent it out. But I don't think so. I think their general business model is to sort of siphon real estate activity towards them. They make money on transaction costs as well. So they don't necessarily lose money if they sell the house for a slight loss, as long as they're gaining market share, because there's transaction costs involved with what they do as well. But their general business model is advanced flipping. It's what people were doing in like the 2005 to 2008 bubble, but people were doing that more individually. Now it's these companies that are doing that on a big scale, or trying to do that on a big scale.
Right. And I'm sorry, but just to underscore a point you just made a minute ago, these corporations are able to borrow at much lower rates than the average individual are. And they have the advantage of, because they're in the real estate industry and they facilitate transactions themselves, they have all of these economies of scale that the average individual doesn't have either. So if you're just a millennial out there trying to buy your first home, you're competing with this corporation that just has way more advantages than you in terms of what it's able to bid for that property.
Yeah. And again, this is underscored by a decade of zero interest rate policy and endless QE. These companies, most of them were founded in the wake of the first housing bubble. And they have spent I think Open Door did 9 rounds of fundraising. They have so much capital. They go in and they target entry-level starter home neighborhoods. And you've got, this little couple, and they're like, okay, well, this is our income, and how much can we afford? And they come and bid on this house, and Open Door can easily come in and offer 10% over list, all cash. And if you're a seller in that market, you're going to look at that and be like, okay, this is all cash. It's a done deal. Like, that's going to be a very lucrative offer. And a regular family is not going to be able to compete with that.